Hey everyone, let's solve this DDM question. Try it yourself first, pause the video, and then follow along. Game X stock is selling for $15 per share. The firm's stock prices have been growing at an annual rate of 15%. It's expected to grow this way for 3 more years. No dividends have been paid out yet. However, the firm is expected to declare a dividend of $2 in year 3. So let's draw this out. So 1, 2, 3. They're going to pay a $2 dividend 3 years from now, and then it's going to grow at 6%. So every year after that, it'll grow by 6%. The required rate of return is 18. So we're going to use that as our return. And the question is whether or not the stock is overvalued or undervalued. So really what you want to find here is the correct price by using the dividend discount model. So we're going to discount these dividends back to time 0. So what we have is a constant growth DDM, but starting in year 3. So your first step, we're going to use D3 in the constant growth DDM formula. So D3 divided by your rate minus your growth rate. And that'll give me the price in year 2. So that'll be $2 divided by the rate minus the growth rate. 2 divided by 0.18 divided by, 2 divided by 0.18 minus 0.06, 1666 or 1667. So that would be the price 2 years from now. Remember that when you use the constant growth DDM, the price you're finding is the price 1 year or 1 period before the dividend. So because I use D3, I'm finding P2. Your second step now, since you know the price in 2 years, is to bring it back to today. So that becomes like a future value. So the price today would just be the present value. I'm going to take that $16.67 and discount it at 18%, right? That was the required rate of return squared. So I'm using my basic present value equals future value divided by 1 plus your discount rate to the n. So 16.67 divided by 1.18 squared is $11.97. So this is the correct price. Right now it's selling for 15. This is the market price. Since the market price is greater than the present value, it's overpriced, and it's overpriced by 15 minus $11.97, which is $3.03. So it's overpriced by $3.03. Okay, that's it for this short lesson. Hope you enjoyed it. If you have more questions you want me to solve on YouTube, just send them my way.